Hey, what's going on, guys? Welcome back to the channel. This is MF Dividend Stocks. I'm your host, Joe. I've been trying to go do this video about 3-4 times. It's just been a mess. So, we're just going to take our time. I'm sorry if it's too long. Thank you guys so much. We have 13 subscribers. We're up to like 2 subscribers since the last video. Everything's looking pretty good. I appreciate it. If you can, like the video. It helps to get out to more people. If you do like the videos that I do, check out the channel, see if there's any more you like, and if you like them, subscribe. I try to come out with videos every Tuesdays, Thursdays, and Sundays. That could change for now, but right now I'm trying to do three videos a week. If you have any suggestions, leave a comment below, and I will get to them, and maybe I can make some videos out of them. All right, so today we got 3 stocks that we're going to talk about, and those 3 stocks are ones that I looked up for the last day or two, and they could be potential safety stocks. I like them. I think I'm going to get into them, so that's why I'm doing a video on it. But granted, don't take advice from me. Do your own research, see what you think about them. I'm just trying to come out with something different than everybody else is doing, so you guys have something different to look at, because when I'm looking on YouTube, I kind of see all the same stuff. So if you have suggestions or things you want to know, leave comments below. I'll do some research on it, make some videos on it. If anything I can help you guys with, it'll be great. All right, first thing we're gonna do a little review over the portfolio, really quick. I did sell a Microsoft stock, and I wound up getting 6 of the 8. Well, not 6. I got 5 from the Microsoft stock. I already had one of PowerShares S&P 500 High Dividend Low Velocity ETF. Yes, it was a down day overall, but I think in the long run, this is gonna be good. Microsoft was my spree stock. And if you guys don't know, this is Robinhood. It's a stock, brokerage stock trader that you can do on your phone, on a computer. It's very nice and simple, very user friendly. You get a free stock if you sign up with my link down below if you guys want. If you heard of Webull, also it's another one. I'm doing a video on that soon, probably later this week, probably like a Thursday. Sometimes I'll pump a random video in there. I'll just pop one out. I've been trying to do Webull for a while to get 2 free stocks. I left a link down below with that too. I'm just waiting for my $100 to get in. I have a whole little series of how I want to do that. That should be a fun one too, so definitely subscribe and stay tuned for that. But overall it went down a little bit, but when the portfolio goes down a little bit, words are hard. When it goes down a little bit, I'm able to collect more stocks. We got a couple of fun stocks going over here. Everything from Coke and up is stocks that I would like to keep. Everything down below Coke, it's stuff that I might keep. Carnival, don't get into Carnival. That's just for a video. If you're looking at the stocks that I got on the side, anything that has to do with cruise ships, hotels, oil, like REITs, people aren't paying rent, people aren't working, like anything you're thinking of, like movie theaters, like anything that you can go to now, it's probably a very risky stock to be in. Like airlines, you can't really take planes anywhere. There's nobody moving around. So I don't know, like there are opportunities, but there's also opportunities for a lot of risk that one of these companies go under. So take it with a grain of salt, everything I say. This is only for entertainment purposes, and you guys can kind of come along with the journey with me, just so we're clear. But other than that, we're doing pretty well. Over the week, we're up $5. Over the month, we're up $232 because we just basically started right here. Like just a little background, I've done 401k investing and all that stuff, IRA, Roths, but I haven't really played the stock market. The closest thing I got to the stock market was about 2 years ago or so, just before Bitcoin really took off. I made a little money there, I lost a little money too. Pretty much stayed just about where I was at. Took a little bit of a hit with Bitcoin and everything, but other than that, I figure stocks, not that are safer, but a lot less volatile. I don't want to day trade. I want to get dividends. I want to make some money, and I think I can hit like 100,000 in 5 years, probably even sooner. So if you would like to see that journey, subscribe, leave a like. We're gonna go step by step. We're up to 1,200 or 1,250 in about 13 days or so. So I got a little more coming in hopefully this week. We'll get ourselves up to around 1,500. We start growing. These stocks start coming back. It'll be pretty cool. All right, first up, we got TJX. TJX is home fashion. 4,300 stores, like about 9 countries. They got like TJ Maxx, Home Goods, yada yada, like things like that. Basically like clothing stores, furniture, fashion, home stuff. Sales growth, 10 years. For the sales growth, the last 10 years, 2% to 7%. That's pretty high for brick and mortars. I like where that's going. That looks pretty good. All right, these are all done out of research of a whole bunch of different companies, like a whole bunch of different sites. This is not only Dividends.com. The stock's going for $47.85, which is pretty good price for it right now. I think it's about even. I think it was even. TJX over the 1 year. No, this is the one. I'm sorry. The next one we're going to talk about is almost about even. 46. Do we have a fair price on this? That would be nice. 47. Yeah, okay. This is the one that was almost even. They're saying Robinhood is Morningstar. They're giving a rating on it. It's a 90% buy. They're liking it. We got a annual payout of 92 cents. Payout ratio is probably a little bit skewed. They got 34. Let's see what do they have a payout ratio on here anywhere? Price to earnings ratio is 18. Not bad. Dividend yield 1.8. It's decent. It should be a safety stock that something can come back and really start cutting into those numbers and change it around. I like the idea of it. It's pretty good. Okay, next up we got Hasbro. I'm trying to make these a little bit quick. Tell me if you want more information about these stocks, and we'll do that. Hasbro is 9 years away from getting an Aristocrat. Aristocrat is when you raise your dividend shares for 25 years in a row. So they got 9 years left. And you pay them on time, you don't stop them, you don't cut them. Their company is going to do whatever they can to keep that streak going. It's like when you get to Aristocrat level, you get to a whole different level of company. And Hasbro has that chance to do it. They got 9 years left. They raised their dividends 2.6% over the last 16 years. So they're putting work in. Dividend yield is 3.59. That could be a little bit low, what's going on right now. The payout is 2.72. Payout ratio is high, but that could hopefully be different when they're profiting more. Dividend growth, 10 years. One thing I like to show, because one thing can help me out, guys, if you have a good site for a premium feature, I kind of like Dividends.com. I know there's other ones that are expensive out there. There was one I was thinking of. Simply Safe Dividends. That's like $400 a month. I mean, not a month, a year. I don't know if I want to go for that. We've seen the last 5 years, steady growth, up and up and up and up, and it's looking pretty good. So I'm definitely thinking about putting some stuff into this. The industry is basically toys and games. Nice and simple. It should be a good one at 74. Let's see where that has to go. 74. We'll check that out quick. Hasbro. It's at 74 now. Do we have a rating? 65% buy, so people are liking to buy it right now. So, they got a narrow moat, which is not great. Everything's going to be uncertainty, medium. That's actually not bad. Fair price is $90, so it does have room to grow. It is on a little down tick for the last year, but that's right around the time with, what's going on right now. And we're up and down, but they made the drop. They're starting to bounce back. If they get up to around here again, that's not going to be too bad. And get a little bit of a bump in growth, because it has definitely room to grow. And you're going to get an Aristocrat in 9 years. So it'll definitely be a nice long-term hold on. And our last one is Vanguard's Dividends, the ETF. I looked this up. I thought this would be something safe for everybody. Granted, don't take random advice from somebody on YouTube. I just want to make sure I tell everybody that, because you never know what can happen with these things. The market is the market. It's very unpredictable. Dividend yield 1.37. The payout is $1.90, which is pretty good. 6 years dividend growth. If you go down here, I think their chart looks pretty, like a little bit up and down. They're not going to be an Aristocrat, obviously, because they're ETF. And it's got good payouts. Nice and steady. And the thing they do is that, I forgot where I found it. Maybe they pick 10 companies, and they weight it. I think it's cap weight or something to weight it. I forgot what they said. But 10 of the highest paying dividends are the best paying dividend stocks. So they kind of like any other ETF, they take the top 10 or the top 50 or the top 70, and that's what they use it against. So it's at 109 now. We can look it up. I think I might even said 111 for the VIG. Yeah. Oh, okay, here we go. This is what I saw it. Tracks the market cap weighted index of U.S. companies that have increased their annual dividends for 10 or more consecutive years. That's what it was. It wasn't 10 companies. It was 10 or more consecutive years that increased their dividends. So that's pretty good right there. They don't give you a lot of information on Robinhood with these, but these are all like solid picks. Something I want to look into. So I wouldn't tell you to get something that I wouldn't want to get too. On here, anything like you got Coke, that's probably gonna be pretty safe for you guys. Comcast, this one should be going pretty good. It's like, you know, it's internet entertainment. I'm not saying to like get any of these. These are just kind of like bonus ones that, you know, I thought of, but I have to slowly get into them. Wells Fargo could be up and down. You know, it was bad stuff said years ago and like some kind of crap that Wells Fargo be in. But they're one of the top 4 or 5 banks. So I'm figuring they can come back from losses. They're already probably bouncing off the floor again in the last year. In the last 3 months, they're coming back up. 1 month, we're in the green with them. $5, so it's already kind of working out for me. But I want to put my life savings in none of these companies. You kind of spread them out, so whatever happens, happens. Carnival, I did it for a video. This is going to be a dangerous stock. If you guys want to check on this, I'll do updates on this one like once a month or something. Hertz is another one, like, you know, you think they can come back, but they can easily just not be around no more. So these are all like high risk. I put a little money into it for fun. Especially Groupon. This thing was going for 89 cents. It's going for 85. I used Groupon the other day for something. I can't remember what it was. What the fuck was it? I can't remember. But I used it for something. But yeah, guys, thank you guys so much for watching. If you can, leave a like. If you want to see any links, go below. Check out the links. Sign up to Robinhood, get a free stock. Subscribe to the channel. We only got 13 guys. We need more. We need to make a movement here. It's you and me, boys. You and us. Me and us. You and something like that. All right. Later.